Bismillahirrahmanirrahim. Allahumma salli ala Muhammadin wa ala alihi wa sahbihi barik wasallim. Honorable delegates, esteemed speakers and panelists, distinguished guests, ladies and gentlemen, I'm extremely delighted to welcome you all in the SAARC Finance Seminar and really feel privileged to share my thoughts on challenges, opportunities in the capacity building of central banks and financial industry. I extend my sincere gratitude to all distinguished delegates from SAARC region and experts who have joined today. Their presence underscores our shared commitment to strengthen the capacity of central banks and the financial industry at large in this era of technological transformation, and particularly to the delegates that have come from SAARC member countries. I really feel honored and feel my express and sincere gratitude to them. And I hope that they will enjoy their stay here in this beautiful city of Islamabad and will, will enrich their knowledge, understanding, and awareness with respect to these emerging challenges in this technological age. Ladies and gentlemen, central banking has undergone a rapid transformation in the recent decades, with the scope of central banking functions expanding significantly. Global challenges such as geoeconomic fragmentation and climate change have further intensified this shift. At the same time, the structural changes within the financial sector, driven by technological advancements, are reshaping the financial ecosystem and the future of banks at an unprecedented pace. According to a recent survey conducted by Bank of England and Financial Conduct Authority on the usage of artificial intelligence and machine learning in the financial industry, 75% of the firms responded that they are already using AI, with uh, with, with further 10% planning to initiate and start the usage of AI within next 3 years. In case of insurance companies and international banks, this number goes to 95% and 94% respectively. So these results show that the possibilities arising from this emerging technology in enhancing efficiency, inclusivity, and affordability of the financial services are unlimited. For instance, in emerging economies, including the SAARC member countries, where the financial inclusion levels are low and the MSMEs, micro and small and medium enterprises, are predominantly operating in the informal sector, AI and machine learning can potentially help financial institutions to better assess the credit worthiness and cash flow generating capacity of the MSMEs. According to 2021 McKinsey report, Building the AI Bank of the Future, the potential value of the AI and analytics could reach as high as $1 trillion per annum for global banking. However, as the regulators of the financial industry, the central banks should find new ways, excuse me, should find new ways to strengthen these safeguards against the new risks and challenges that have emerged, manifesting themselves in the form of digital frauds, data privacy concerns, and systemic risks with implications on financial stability. To me, the strength and ability of the regulatory bodies to effectively cope with these risks, which they have not seen earlier, it depends very heavily on the skilled human capital, rapid technological adoption and adaptation, and very importantly, the regional cooperation to learn from each other. Ladies and gentlemen, in this context, let me highlight three emerging challenges that require appropriate and collaborative approach in developing the HR capacity to cope with the risks being posed by the technological advancements, including the AI and the machine learning. First, the rising pace of advancement in the artificial intelligence, blockchain, digital currencies, and big data analytics call for new skill sets for central banks to effectively regulate and supervise the banks and financial institutions. Unless they have that capacity and understanding, it will not be possible for the regulatory bodies to properly assess, identify, and come up with right kind of regulatory frameworks that could help them to ensure that these risks are properly managed by the financial industry. So this requires suitably adapting the recruitment and compensation policies. If we want to engage suitably qualified the IT professionals, professionals having the skills in the IT sector, and the professionals that have the capacity to preempt the kind of risks the industry is exposed to. For that purpose, the regulatory bodies and the financial industry at large, they will have to adapt their recruitment policies and the compensation policies as well. For instance, in our case, we have been facing a huge issue of retaining the IT professionals. We recruit them, they stay with us for 1 or 2 years, and then they leave. So it's a real challenge, and we are adapting our compensation policies so that we should be able to retain them in in our institution. So this is a real challenge that we need to see. So as I was saying, that this requires suitably adapting and the recruitment and compensation policies to attract and retain the IT professionals. This will also require reskilling of existing workforce, because it's a huge workforce that is available with the regulators, with the financial industries, that needs to be retrained. And that would come through adapting the training and development policies, through, through having those TNAs whereby we could see that which of the workforce has the capacity to be retrained and which doesn't have the capacity. And those who doesn't have the capacity, a big chunk will have to be replaced. And that, again, is a challenge. As per the World Economic Forum's Future of Jobs survey and a report of 2025, AI and automation is set to displace 92 million jobs globally by 2030, which is about 8% of the overall global workforce presently. So it's a huge challenge that is that not only the financial industry but the overall business and industry at large that they need to cope with right kind of adaptation in their respective recruitment and compensation policies, etc. The second challenge that I would like to emphasize here, and that is very, very pertinent for the SAARC region and the SAARC member countries, that the use of digital financial services is more widespread in advanced economies than the emerging and low income economies. that reflects a global digital divide. The situation for this situation of global digital divide, there's a it is more predominant and it's more concerning in the South Asian countries. According to the World Bank Index data from 2021, around 34% of the adult population excuse me, in South Asian market, South Asia, they make or receive payments digitally. This ratio is 50% in sub-Saharan Africa and 46% in Middle East and North Africa. This is mainly on the back of weak digital infrastructure and lack of education and awareness. To unlock the potential of technological progress, both by the central banks as well as the financial institutions in this region, they have a, two very important roles. One role is with respect to developing a digital ecosystem that could enable the policymakers, the central banks, and the financial industry at large to increase the penetration of these digital platforms to, to minimize this digital divide and bring more and more people and more segments of the economy on the digital platforms to bring convenience, to bring efficiency and transparency, etc. And to ensure that we are able to compete at the global level. And the second one, that in addition to creating that ecosystem, they will have to have that those such regulatory mechanisms and digital infrastructures available that could create a balance between the digital innovation as well as the financial stability. So that's a uh, I would say an additive challenge that being faced by the central banks and the financial industry in the SAARC member countries. That not only we need to develop that ecosystem that could increase the penetration of the digital financial platforms, but also a regulatory framework that balances between innovation and the financial stability. The third challenge with respect to the risks that we are faced with is with respect to that the regulatory frameworks. When we see that the regulatory frameworks have become more complex in view of rising fintechs and expanding financial interconnectedness. In addition, rapid pace of digitization in the financial arena has also generated new risks, including cybersecurity threats, data privacy concerns, and financial frauds. Therefore, collaboration in, in capacity development, both at the central banks level as well as in the financial institutions, stands crucial to combat these challenges effectively. Ladies and gentlemen, as we embrace technological progress to discover new and effective ways of working, central banks must design forward-looking capacity building, building strategies to equip their workforce with the skills, knowledge, and resilience needed to lead and steer the emerging ecosystem effectively. In the SAARC region, these challenges are even more intricate due to the diversity of our economies, varying levels of financial inclusion, and technological readiness. I will take this opportunity to focus on two key areas briefly. One is leveraging technology for capacity enhancement. Digital transformation is no longer an option. It is rather imperative that we must transform, we must enable ourselves because otherwise we won't be able to go with these challenges. Central banks must integrate advanced analytics, AI, and automation to improve policy formulation, risk assessment, and operational efficiency. This requires generous investment in technology and HR and widespread collaboration between regulatory bodies and commercial and financial institutions. Second, the regional cooperation and knowledge exchange programs. SAARC Finance platform provides provides us with a unique opportunity to collaborate across borders by establishing joint training programs, facilitating cross-border attachments, and creating regional centers of excellence. We can collectively build a more resilient financial ecosystem in the SAARC region. Ladies and gentlemen, I'm confident that today's seminar, inshallah, is going to have extremely engaging discussions on critical themes from workforce strategies in the era of disruption to leveraging technologies for financial sector resilience. These conversations will not only provide actionable insights, but it will also enable us to think beyond immediate challenges and envision a future where our financial system is more inclusive, innovative, and adaptable. I encourage you to actively participate, share your experiences, and take away valuable learnings that can that can be applied in your respective institutions. The strength of our financial system depends not only on robust policies, but also on the people who implement them. Investing in human capital, fostering culture of continuous innovation, and deepening regional cooperation are key to ensuring our institutions remaining agile and future ready. As we embark on this journey together, let us reaffirm our commitment to building a financial ecosystem that reflects the aspirations of our people while leading in developing global best practices. By doing so, we will not only meet today's challenges, but will also unlock the vast potential of tomorrow. Thank you very much for your attention.